Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making them move, and what to expect for the future. Today is March the 28th, 2023. It is now 4:21 p.m. Central Time. The bond market is closed. Mortgage-backed securities are closed for the day. We're going to take a look and see where we are right now ahead of the big report that is coming out later this week on Friday, the Personal Consumption Expenditures Report, which is really our number two report out of the four that we pay close attention to each month. And it's actually the favorite measure of inflation of the Federal Reserve. And of course, inflation right now is what it is all about. So I want to show you an article here that talks about inflation a little bit. Rent growth drops back to pre-pandemic levels, but some markets are falling much harder. In here, Diana Olick mentions that in March they were up 2.6% from a year earlier. Okay. So first of all, understand they're still up. Okay. So rents go up consistently. That is normal. 2.6% is just more of a standard number or more of the number that was, that's in this case, pre-pandemic. Why does that matter to us? It matters because housing is a large component of what makes up the figures of both the personal consumption expenditures report as well as the consumer price index reports. Those are the two big reports that the Federal Reserve is looking at when they decide how they feel that inflation is looking and whether they're going to increase, decrease, or stay the same on the federal funds rate. So we want to see inflation come down. We've been talking about that now for over a year. So if we see that rents are slowing, so that all of a sudden they're not going up as fast as they were, and we all know in watching all of these charts and statistics that they're like a roller coaster, up and then they slowly come down. That doesn't really go up and then just drop back off. Okay, so rent increases don't just disappear, but they're slowing down, and that's going to allow us to get over the crest of the rental spike that we experienced in 2020 and 2021 and 2022 and allow housing to come back down, which will improve the readings on our PCE and our CPI reports, bringing inflation down. Home loan interest rates come back down. So, how are we looking right now on our charts? Today, we're down 9 basis points. Not a big move. Up 4 on the 10-year Treasury. Also, not a big move. Kind of hanging out in this area that we figured we would be hanging out in, especially because you see this convergence of the 50-day moving average and the 100-day moving average. So, this is about where we're going to hang out until we get a stronger movement in one way or the other, which will come in the form of the personal consumption expenditures reading. Now, between Wednesday and Thursday, we will talk about kind of our game plan and what we're hoping to happen and what we want to what we expect to happen. The numbers that we will be replacing from 2022. We'll go into all that in the next couple of days. So, where are home loan interest rates right now? Let's take a look at the Brent Bruce Daily, very well qualified 30-year fixed conventional home loan to see where we are landing. Now, again, we've been around that 6.5% range today, 6.625, but we've noticed that buying the rate down has been pretty effective. I believe yesterday we could get to a 5.99 for only 0.6. So let's take a look and see where we are right now. Flag Star, which is 6.625. What's it going to take to get to a 5.99? Well, they don't offer that. So 6.0 is going to cost 1.3. So just over 1 point to get to about 5.99, that 6% number. Let's take a look and see what 11's got for us here. So 5.99 is costing 1.4, a little bit more expensive. 1 point is getting us 6.125. And if we were to go a little bit lower here, let's go to the United Wholesale. They are sitting at, really 6.5% with almost no cost to get to that 5.99. In this case, there you go. They're third on the list as far as true 0 point offers, but they're number one on the list as far as how much it costs to get to a 5.999. So we always have to look closer into these numbers to make sure that we're making the best offer, which is why I am a mortgage broker, not a mortgage banker. So let's take a look here, open this up, show you the parameters for the numbers that we just looked at here to make sure that we stay in compliance. Okay, so again, remember that lower interest rates, if you want lower interest rates, you have to hit the like and subscribe button on my channel because that seems to correlate. I'm not really sure how, but it seems to correlate. Make sure that you like, subscribe, and share. We are going to have a little bit more lengthy report here in the next day or two talking about our expectations for the personal consumption expenditures report and what we want that to look like as we move into the big game, The big game is second quarter 2023. That starts in a couple of days, and this is where we're going to see if my projections from January were way off or if we end up pretty darn close or maybe hitting those projections by July the 1st. And that all is going to be dictated by what happens here in the second quarter. Talk to you again soon. Let me know your thoughts. Make sure that you like, subscribe, and share. We'll see you then.